Good afternoon, everybody. It is Wednesday, September 21st, and the name of the game today, as it has been for the last 9 months, is the Federal Reserve. And so they came out today, they raised their key interest rate by 75 basis points. That was completely expected. The market had basically assigned a 100% probability that we were going to get a 75 basis point increase. There was a chance you'd see a really jumbo increase of about 1%. That didn't happen, so no one expected news there. The bigger news, or I think what people anticipated more, were what were Chairman Powell's comments going to be in the wake of that rate hike. And he continues to be pretty hawkish. He basically said we can probably expect about 2 more rate hikes before the end of the year, another 75 basis points in each of the next 2 meetings. That's another 1.5 or so to the Fed's key rate, which is going to push us about over 4% coming into the new year. He also gave an indication of what economic expectations are going to be. They're looking for about 0.2%. That's 0.2%, which is pretty moribund for this economy, but growth for 2022 and a 1.2% growth rate for 2023. Now, here's the thing. The Federal Reserve, they can absolutely kill demand. And that's what Powell said today he is actively trying to do. So no mystery there. He thinks the housing market is too hot. He thinks that there's essentially too much money chasing too few goods. And his goal is to try to get some of that cash out of the system. Now, here's my take on this. My take on this is that I think we're going to see decreases in the inflation rate come along a little quicker than what the Fed seems to think. If you look at the price of industrial commodities, we're talking steel, copper, even oil, lumber. These all peaked out several months ago. So the prices that are being paid today, what you see with the finished goods on the shelves, that's based on commodity prices where the input cost was much higher. I mean, I was looking at steel today. Steel's trading below where it was before COVID started. You can say the same about lumber. Copper is not quite back to those levels. But these commodities are coming in hard. So the products that are on the shelves 6-8 months from now are going to reflect these much lower input costs. I think inflation is going to come down a lot quicker than I did a couple months ago, just based on what you see happening in these other markets. But in the meantime, here's a positive thing. So we've gotten 2 jumbo rate hikes the last 2 meetings. We are still, however, the market hasn't been great for the last couple months, but we're actually trading above the June lows. Prognosticating in this business, trying to guess which way the future is going to go, is a really quick way to make yourself look kind of foolish, but I'll put one out there. I think that we're probably pretty close to being done with this market. I think it's highly likely we get an undercut low of the June lows, at least in the equity markets, and I think it's going to be short and brief. And at that point, I'll go out on a limb and say I think we're going to be pretty close to being done. I've said for the last several of these videos that I've done, we have to see the bond market firm up before the stock market is going to stabilize and then begin to go up. I think we're going to see this happen pretty quickly. I mean, what you've got now is you get a situation where the 1-2-year treasuries are yielding not just a little higher, but way higher than the 10-year, way higher than the 20-year, way higher than the 30-year. Those conditions usually exist before a recession. I've also said before, I think we're probably in one now. Chairman Powell has literally said in his comments today, he is trying to drive us into recession. He's going to get his wish. Once he gets the economic data to support that, I think the Fed backs off, and I think everybody breathes a big sigh of relief. So anyway, if you agree with me, disagree with me, please give me a call. Always curious to hear your thoughts. And in the meantime, if you stay with me for 3.5 minutes, I appreciate it, and I will talk to you again soon.